It was always a hot dumpster fire.
Always?
Yeah, I'm not going to say that it was all fraud. Some of it was a pyramid scheme.
All right, cowpokes, buckle up, because this one is going to be huge. Like, I really mean it. Take me seriously, okay? Why are you laughing? Because what Peter Zeihan is saying in this video about crypto could be a game changer for you as an investor. Alright, so let's jump in. Peter Zeihan, the now famous analyst of geopolitics, has been vocal about crypto and Bitcoin in the past. He actually believes it serves no purpose at all, kind of like my parents and my interest in video games, but that's a story for another time and not for this channel. But in recent interviews, he has been more critical than ever. Now, make sure to stick until the end of the video, because as an intelligent investor, you always want to get the full picture, even if it goes against your current belief. And the interview he did with Joe Rogan is exceptionally shocking. To get some context, let's start with a clip from a recent interview Peter did with Anthony Pompliano. Yes, I did do the handshaking motion. He's got an Italian name. What can I say?
You think that Bitcoin is quote unquote a dumpster fire. Can you expand on that point of view?
Let me put the macroeconomic background for why Bitcoin is happening now. So the boomers right now are in the most liberal investment environment of their lives. They're the largest generation this world has ever had. So capital costs for the last couple of years are the lowest they've ever been. And in a couple of years, they're going to be very, very high because all that boomer liquid capital is going to go away and it'll be locked into T-bills and cash. Bitcoin is emerging in this environment when money is free. It's not going to be here in a couple of years. It's not a store of value. It's not a method of exchange. It is not readily shiftable into the real economy. We've discovered with the Russian sanctions that it is completely dependent upon the normal financial system for access. That means it's vulnerable to anything the government might do. It's already been banned in 10 of the top 20 economies in the world. And in terms of productivity, oh my God, to generate it, you're talking about something that if we ever get a carbon tax has a negative value. So yes, there's nothing about Bitcoin that's here for the long haul.
I'll just say that these macroeconomic factors that Zeihan brings up are nothing to sneeze at. Whether you believe that Bitcoin will come out of this period stronger or weaker, there are certain facts we've got to face. For example, the liquidity present with the current middle-aged generation of baby boomers, or should I say the lack of liquidity in the future as they pass away. Not only is there a ton of people entering the second halves of their lives with more money than ever, but the economy has also seen plenty of stimulus as of late. This extra capital is feeding investments that will take a hit when this liquidity soaks up. Bitcoin has been a popular investment as of late and grew very quickly over the last decade. The boom that we've seen over the past 3 years or so caught more momentum because of the older generation that was persuaded to put their larger amounts of capital into cryptocurrency. Peter also mentions a few characteristics that may make Bitcoin a less effective store of wealth. One in particular is its susceptibility to government regulations. In other words, Bitcoin could be easily outlawed or put in a difficult legal position by politicians' votes. Because of how new and disruptive the concept of cryptocurrency is, governments and banks have been caught on their heels. This is a huge deviation from the paths that all financial transactions have been taking place on. Not only are they unable to track who is paying who for what, but they also cannot freeze funds. There are certainly arguments for regulations, such as the need to curb criminal transactions for illegal services. On the other hand, there is an attractiveness to the layperson's ability to manage his own finances privately. This gray area will undoubtedly cause contention when legislation is introduced to regulate crypto. What's more is his point on the productivity of Bitcoin or the efficiency of it. This is another factor that could play into a ban or heavy regulation on crypto like Bitcoin. While this digital currency has cut out the middleman in a lot of ways, it still takes energy to perform as expected. If something like a carbon tax was applied to the mining of Bitcoin, it would instantly make the practice unprofitable. So if this happens, then the price plummets. Very quickly, mind you. But before I show you the shocking clip from the Joe Rogan podcast, I want to play another clip from Anthony Pompliano's interview. Pompliano brings up a specific scenario where Bitcoin may be useful, but Zeihan pretty much brushes it off and uses this case to call out money laundering.
But if we're moving into a world where trade breaks down, what you need for a global trade currency is something that's large, something that's liquid, and something where the controlling body of the currency does not regularly manipulate it so it can be used with a degree of confidence.
So as you can tell by now, Peter is not the biggest fan of cryptocurrency, even Bitcoin. He's pretty convinced that it has very few uses, and those that it does have are pretty shady. Now just listen to him summarize all of this on Joe Rogan's podcast. But before you do, make sure to smash the like button and subscribe to Profit Protection for more videos like this one.
Crypto.
Yeah, it was always a hot dumpster fire.
Always?
Yeah, I'm not going to say that it was all fraud. Some of it was a pyramid scheme. There's never been anything there. It serves no purpose. It's not a store of value. It's not a medium of exchange. And as we have seen, if you want it decentralized and not under government control, it is a haven for fraudsters. And now it is in the process of going to zero, except for Bitcoin, which will probably go negative, because if we're moving into a world with carbon taxes, you have to take into account the energy that it took to produce it in the first place.
Well, that's certainly playing out with like FTX.
Yeah.
Where you're finding out that
There'll be
it's
more.
a house of cards.
Yeah,
Do you feel like that's just sort of opened the door for people to examine all of crypto now?
Oh, yeah, absolutely. It's like as soon as you have one of the big ones go down, it's just
And just go down catastrophically within a week.
Yeah, I mean, just there's no intrinsic value to this asset. And now it's starting to be priced appropriately. So it has what's Bitcoin at? 16,000? It has another 17,000 to go down.
Duh. Really?
Yeah, there's no intrinsic value to this product.
And do you think that people have just inherently lost faith in the idea behind crypto because of FTX?
Well, it became an ideology. And whenever you invest based on an ideology, you're going to make some decisions that are a little divorced from math.
And what do you mean by ideology?
Well, the people who really like crypto are convinced that it's the currency of the future and that a decentralized ledger is the way to go, and that anything that is controlled by a government entity is by definition a negative, and if it's done by the private sector freely, it will be better. And that's just not how currency works. Currency is a method of exchange and a store of value. And for that, there has to be a degree of trust, and you have to have it managed in terms of volume. I mean, one of the craziest things about Bitcoin is that there will never be more than X number of units of Bitcoin. Well, by default, that means it can't be used for trade, because the whole idea of economic activity is that there's expansion, which means you need more currency to lubricate and manage that expansion. If currency is locked in at a specific number, you get monetary inflation, and that is one of the fastest ways to destroy an economic model.
So because of the lack of Bitcoin, because there's a certain controlled number, the only thing that can happen is Bitcoin becomes more expensive.
Right. And that means that the people who hold it are the ones that make the money, but everyone else suffers. I'm sorry, that's not viable. The alternative is you have some private dude out there who generates the coins on a whim. How is that different from the monetary reserve or the monetary authorities that we have at the Federal Reserve, except for the point that there's no accountability? No.
Now, a lot of people have concern that the United States is trying to generate a centralized digital currency that they will control.
The Federal Reserve disagrees with that statement.
What do you mean?
Well, they don't see a purpose. They don't see what need it fills. So there may be an argument for the Chinese doing a digital yuan so they can monitor each and every transaction. But, conspiracy theorists are going to conspiracy. That's just what they do.
I was reading mainstream articles about the United States confirming that they're trying to develop a centralized digital currency.
If you're talking about a digital exchange system, then I can see that.
See if you can find something
But something separate from the USD, no.
This is what I only looked at the headlines of it because someone was sending it around and I didn't have the time because it was yesterday. But this idea of a centralized digital currency is something that Maxine Waters talked about. She said that we have to do that in order to compete with China.
Yeah, Maxine Waters is not exactly the brightest person in Congress.
That's not saying a lot.
Yeah, I know it's a low bar, but she passes it.
So, with all that said, do you agree with Zeihan, or is his view of the current financial system just too old school? Let me know in the comments below, and remember to subscribe to Profit Protection for more videos on finance and investing.